Today, it's the busiest earnings day of the season, including the big four: Apple, Facebook, Google, and Amazon. We picked out the most interesting numbers from each report. Plus, a new plant-based partnership turns up the heat in the alternative meat wars. And finally, Kodak stock is having a moment. We dig into the latest moves. I'm Mackenzie Sagalos, and this is CNBC After Hours. Let's take a look at how Wall Street finished the day. Stocks closed mixed, with the Dow and S&P 500 in the red after second quarter GDP plunged by 32%, the biggest contraction of economic activity in U.S. history. The Nasdaq Composite, on the other hand, finished in the green as mega-cap tech stocks closed higher after yesterday's congressional hearing and ahead of their earnings reports. Before we get to this afternoon's avalanche of earnings, we want to put today in a little context. Now, like we said earlier, it's the busiest day of the season. 13% of the S&P 500 reported today. These companies represent 29% of that index's market cap. The numbers are even bigger when we look at the NASDAQ 100, which is Wall Street's way of tracking the 100 largest and most actively traded names in the larger NASDAQ composite. Now, all the companies reporting today make up 16% of the NASDAQ 100 index, and together they represent a staggering 46% of that index's market cap. And one last number, $5 trillion. That's the combined worth of the four big tech companies out with earnings today: Amazon, Facebook, Google, and Apple. $5 trillion of market cap reported in the same 30 minutes late this afternoon. So let's get right into it. Let's start with Facebook. The big number here is 11%. Facebook's revenue jumped 11% in the second quarter. Now, that's the slowest revenue growth for the company since its 2012 IPO, but it's actually much higher than what analysts were expecting. Across all of its apps, Facebook said it has more than 3.1 billion total monthly users, up from 2.99 billion last quarter. Now let's look at Amazon. Estimates were super high here because Amazon has been a winner of the stay-at-home economy, and Wall Street wanted to see big numbers. Amazon crushed almost all expectations. The number here is 40. Net sales surged 40% higher from the same quarter last year as the pandemic fueled online shopping. Sales in North America jumped 43%, and international sales increased 38%. Next is Alphabet, Google's parent company. Our number here is 2. Alphabet revenue declined 2% from the same quarter last year. It's the first revenue decline in company history. Advertising dollars are shrinking overall as companies reduce their marketing spend to ride out the economic uncertainty of the coronavirus. And remember, Google makes most of its money from advertising services. And let's close it out with Apple. The number is 11. Revenue grew 11% from the same quarter in 2019. It came in at $59.7 billion. Now, that's the highest ever revenue Apple has reported for its fiscal third quarter, which is usually the slowest quarter of the year for the company. And Apple delivered these blowout numbers despite facing widespread retail store closures. Another number here is $26.4 billion in iPhone revenue just this quarter. That's about $4 billion more than what analysts were expecting. And we had some news here. Apple announced a 4-to-1 stock split. So what does that mean in English? It means that every share of Apple is being split into 4. So let's say for each share an investor owns, they will receive an additional 3 shares. Stock splits change the value of one share, but not the value of the company. So in our example, this investor has more Apple shares, but their overall stake in Apple is worth the same amount of money. Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
what we need here, given the numbers that you have been talking about all day, with the over 30% decrease with the GDP and the 10% decrease in the economy, we know, to quote the president, this is going to get worse before it gets better. Now, that doesn't mean that there aren't hardworking people out there stabilizing our economy every day, people trying to stay in business, including in my own state. But to me, that means you don't just do Band-Aids.
Instead of these accountable institutions like the Chamber of Commerce, which manages small, medium-sized businesses, or the FDA, which manages what's safe and healthy, we have Apple deciding what's a safe and healthy app that goes in their app store. We have Facebook deciding the infrastructure by which 8 million small, medium-sized businesses reach their consumers. And these are not accountable infrastructures. And I think that's what we saw yesterday.
I think the one thing that's clear is that this is somewhat of an anomalous situation. We've got a protocol that, again, for every other club in the league that has worked effectively, almost to the level where there's no positives. And we now know that a club that played against the club that had an infection, that because of the social distancing nature of baseball, that did not transfer to the opposition team.
The Pizza Hut delivery and carryout business was up 21% in the United States when you exclude closed stores, closed express units. So that's really the relevant number. Obviously, that's a great number, stacks up well against the competition. And that's all done, as you point out, with dining rooms closed all around the United States.
All right, in non-big tech news, Wall Street is having its very own Kodak moment. Earlier this week, the camera company struck a deal with the government to switch gears and start manufacturing drug ingredients. Since then, Kodak has been topping the popularity charts on Robinhood and even here on CNBC.com. It was the most viewed ticker quote page on our site both yesterday and today. And the moves in this stock over these past few days have been nothing short of wild. CNBC Markets reporter Pippa Stevens has all the stats on the new speculative stock on the street.
Kodak is shifting into drug production with the help of the U.S. government. On Tuesday, the Trump administration said it was loaning the company $765 million, the first loan of that kind, under the Defense Production Act. With the loan, the company will launch Kodak Pharmaceuticals, which will produce a number of drugs used to treat a wide variety of medical conditions. Tuesday's announcement, which saw President Trump call Kodak one of the greatest brands in the world, kicked off a frenzy of trading activity in the stock. On Tuesday, shares jumped more than 200%, and on Wednesday, they closed up 318%. During Wednesday's session, the stock was so volatile, at one point rising more than 500%, that it was halted 20 times throughout the day. This only happens in cases where there's extreme volatility and heavy trading activity in a stock. And the fact that it was halted 20 times really underlines how much investor interest there all of a sudden was in shares of Kodak. As investors piled into shares of Kodak, volume activity in the stock soared. On Tuesday, more than 284 million shares exchanged hands, followed by 276 million trades on Wednesday. This is compared to an average daily volume of just 240,000 in the year prior to this week. Part of the recent activity has been driven by retail investors. According to data from RobinTrack, which tracks Robinhood, an app popular with millennial investors, the stock has been added to more than 100,000 accounts over the past 3 days alone, making it by far the most popular stock on the platform. But investors say that those getting into the stock should be cautious. For one, Kodak doesn't currently produce any of the drugs that it purportedly will produce in the future, and facilities aren't even ready to begin production. The loan will help expedite that process, but still, there's a far way to go. Additionally, whenever there's a move of this magnitude, when you see stock rise by hundreds of percents in only one day, caution is definitely warranted.
Okay, time for today's numbers round. We'll kick it off with 2000. Beginning today, the Impossible Burger begins its rollout into 2,000 Walmart stores. Now, with this launch, Impossible Foods' retail presence will grow 50 times bigger in just 6 months. The Walmart announcement comes on the heels of Impossible's partnership with Trader Joe's and is the company's latest swipe at plant-based competitor Beyond Meat, which is sold at Walmart too. Beyond is also sold at Costco and Target, 2 big box stores that do not yet carry Impossible products. Next, 10 million. News streaming service Peacock has already clocked 10 million signups. It launched in April for Comcast customers and then more broadly this month. Peacock is the latest fighter to enter the arena of the streaming wars, competing with Apple TV+, Netflix, AT&T's HBO Max, and Disney's Disney+, just to name a few. We should note, Peacock is part of our parent company, NBC Universal. And finally, zero. Zero of the 300 plus NBA players who are living and practicing in the Disney World bubble have tested positive for COVID-19, at least as of yesterday when the league last released results. Another zero here too. The NHL has also reported 0 new positive COVID cases this week. That league is training and playing in bubbles as well. That's it for After Hours, but before we go, here's one more thing to keep an eye on. We only scratched the surface of all the tech earnings that are out this afternoon. We'll be on the conference calls with those company executives and breaking down what the numbers mean for these businesses and their outsized influence on the broader stock market. Stay up to date with all the developments and analysis on CNBC.com and the CNBC app. We'll see you back here tomorrow evening for our first ever Friday edition of After Hours, so be sure to catch us then.